Welcome to this week's weekly video update for Market Matters. It's Thursday today, Thursday the 2nd of September, the second day of spring. Reporting season's just wrapped up, and we're going to chat through that in just a moment. We're going to kick things off with how the portfolios performed through August. James, how did we go?
Yeah, it was obviously an eventful month going through reporting season. So if I run through the portfolio performance as customary on the first video of the month, we had the growth portfolio up 1.84% for the month, marginally below the index. It's now up 3% financial year to date. The income portfolio had a solid month, up 2.83%. It's up a similar amount financial year to date, about 3%. The international portfolio, the emerging companies portfolio, your portfolio was up 1.17% and is now up 4.1% financial year to date. The international portfolio gave back a little bit on during the month, down 0.37 of 1%, and it's up about 0.5% financial year to date. And the ETF portfolio was down 1.1%. So this is the macro ETF and is down 1.8% for the year. So that's more has a more negative skew at the moment, and that's hurting in a strong market. But overall, look, a reasonable month. The income portfolio was the shining light during the month in terms of performance, but all the tracking okay financial year to date.
Happy days. Like you said, eventful month is August, always is with reporting season. Just generally, how did you see reporting season this time around, James?
Yeah, I think it sort of happened in two parts. So the first part of it was really strong. So companies reporting early were really strong and were more bullish on their expectations moving forward, and it sort of petered out towards the end. So there was, results got a little bit weaker and guidance got a little bit more scarce. So I think that was key. I think the other thing that I'm looking at the moment is a reluctance by analysts to upgrade their earnings expectations throughout a year. So basically that's a derivative of companies not providing guidance. But again, normally analysts are pretty optimistic, bullish bunch, and normally they go out there after reporting and are pretty aggressive in upgrading their out of year earnings assumptions. That's not the case at the moment. So I'd say that the market sort of has come out of reporting a little bit cautious, would be my take, Harry.
We saw that play out yesterday and today's session as well. I know there's a lot of ex-dividends coming out today, but we're pretty weak at the moment. Three stocks that caught your eye, James, three specific names that I want to hear about.
Yeah, I thought we'd do something different this week and just target three stocks that we hold that really, for different reasons, caught my attention. I think that the first one's pretty obvious in Whitehaven Coal. It's been a strong position for us, but I don't think the financial results or the operational performance in FY21 was very good. Obviously the coal price rallying so strongly is been a really strong tailwind for it. But one specific thing in the report, and more so on the call after the results, was just around their de-gearing. They believe they're going to be debt-free by the second half of FY22 if coal prices stay where they are. So it sort of reminds me of where Fortescue was a few years ago, where they had a heap of debt. They had a weak commodity price. They then got a really strong commodity price tailwind, and that allowed them to retire a lot of their debt and look where they are now. I don't think Whitehaven will do that, but I think it should be trading, still, even though it's run hard, it still should be trading a lot higher than it's trading at currently, which is around $260 a share. So high prices for that one post the results, Harry.
Definitely. What's up next on your platter there, James?
On the flip side, I thought we always look at our results with the lens of stocks we hold probably more harshly. So I thought Altium was a really disappointing result. So obviously they've had the deal from Autodesk, which they've rejected, and on all the communications around the rejection of that offer seemed or implied that the business had really strong momentum. So then you come to reporting and they report lower margins than the market was anticipating or they'd guided to, plus their forward guidance around margins is weaker, plus they pushed out their 500 mil revenue target out by a year. So you think about how you message the market and then come and deliver a set of results like that. I can understand why the stock got got whacked on the back of that. So I sit here, and we were on a conference call yesterday with management. They're still talking a very big game. Obviously, most focus has been on margins. The street has now turned decidedly bearish. The stock, there's more sells out there than buys. So look, I'm sticking with a contrarian call on Altium. I think in 6 months' time, we'll sit back here and say this was a buying opportunity. We're considering adding to our position here. So certainly not selling, considering adding. And I think, despite the result being weaker and disappointing to us, it's probably another buying opportunity.
Yeah, listening to management yesterday, it didn't sound like that was the end of the corporate interest in Altium. Definitely not. Among the smaller names, you got one lined up there. EML, it's a pretty strong result from them. Well, reasonable result. The outlook for those guys is sort of changing dramatically in the next 6 to 12 months, James.
Yeah, what really stood out to me was almost the. I think they've got to a point where they've got a large way through their regulatory issues over in Ireland. So, if we rewind the tape sort of 6 to 9 months, they were facing some, the market really repriced EML shares on the back of, that Irish business being worth very little. So now we fast forward and now we've got it that by, the end of this year, the regulatory issues are all going to be gone. So, all things going well, they'll be gone. So that sets up, a really strong bit of clear air, blue sky for EML from here. So I like the story. I'm happy that you've got it in your portfolio and that you held on to it through some pretty negative news flow, because I think a lot of people got shaken out of this stock on the sort of downbeat regulatory outcomes. And I guess there's some lessons in that around, we've got Crown in our growth portfolio. It always looks really bad when the regulators are in, are there targeting your business, but it often, the rhetoric at those points are often the worst. So well done on holding EML.
Yeah, definitely. I think it looks really good. The guidance for mine was pretty conservative. They basically make that guidance if they can reproduce that second half again for the full 12 months in the year ahead. But that's all for today, James. Thanks for joining us. Thanks for running through those reports.
Thanks for the update, Harry, and thanks listeners for tuning in.